Hey everyone, it's Mugit. Let's talk about something that's everywhere right now in 2026. Gold. You can't scroll through social media, watch a news clip, or open your investing app without seeing someone saying, buy gold. Gold is the ultimate safe haven. Gold protects you from inflation. Gold is what the smart money is doing right now. Gold is the hedge against everything going wrong. The economy, the dollar, the government, the banks, the future. And honestly, it makes sense on the surface. Prices for everything are still high. Inflation hasn't gone away. Uncertainty is everywhere. Jobs feel shaky in some sectors. Debt is at record levels. People are worried. So when someone says, put your money in gold because it's been a store of value for thousands of years, it feels safe. It feels smart. It feels like you're finally doing something to protect yourself. But here's what I want to say right at the start. For most normal people in 2026, people with average salaries, regular bills, real-life emergencies, buying gold is usually not the best move. In fact, for the majority of us, it can be one of the worst moves you can make right now. Not because gold is bad, not because gold can't go up, not because it's a scam. Gold has its place, but the way it's being sold to everyday people as the one thing you should buy to save yourself is misleading. And it's keeping a lot of people from doing something much simpler, much safer, and much more effective for their actual life in 2026. Let me tell you how I got pulled into the gold hype myself, because I was right there with a lot of you. A couple of years ago, when inflation was peaking and everything felt like it was getting more expensive every week, I started seeing the ads, the videos, the posts. Gold is up 30% this year. The dollar is losing value. Buy physical gold before it's too late. I remember thinking, okay, this makes sense. I don't want to be left behind. I don't want my savings to disappear in purchasing power. So I started researching. I looked at charts. I watched people talk about how gold always performs during uncertainty. I even went to a few coin shops and looked at the bars and coins behind the glass. But every time I got close to buying, something didn't sit right. First, the price. Gold isn't cheap. Even small amounts cost hundreds or thousands of dollars up front. If you're already stretched, rent, groceries, car payment, maybe some debt, pulling that kind of cash out of your budget feels like a risk itself. Second, storage. Where do you keep it? A safe at home? A safety deposit box? Both cost money and come with risk. Home safe can be stolen. Bank box has fees and limited access. Third, selling it. If you actually need the money in an emergency, car repair, medical bill, job loss, how fast can you turn physical gold into cash? Dealers take a cut. Pawn shops give you way less. Online buyers take time and fees. It's not like transferring money from savings to checking. And fourth, and this is the big one, gold doesn't produce anything. It sits there. It doesn't pay interest. It doesn't pay dividends. It doesn't generate rental income. It just hopes to go up in price when you need it. So I kept asking myself, if I'm trying to build real financial breathing room, is gold really the best place for my limited money right now? Or is there something simpler, more accessible, and honestly more powerful for someone like me, and probably someone like you? That's when I started looking at what people do who've been dealing with uncertainty for generations. People who don't have access to fancy apps, stockbrokers, or big investment accounts. People who've survived wars, depressions, inflation, and hard times without ever touching gold bars. I'm talking about the Amish. Now, before you roll your eyes, I know it sounds weird, but hear me out. The Amish aren't sitting on piles of gold. They're not day trading crypto or chasing the latest hot stock. And yet, community after community, they stay financially stable through crises that wipe out other people. They don't go into massive debt. They don't lose everything when the economy crashes. They keep going. So what do they actually do? They focus on things that are boring, simple, and extremely effective. They pay cash for almost everything: houses, equipment, land. They avoid high-interest debt like the plague. They build real skills that save money long-term: farming, building, repairing, preserving food. They invest in productive assets, land, tools, livestock, businesses that generate cash flow. They keep large cash reserves in simple, safe places. They rely on community mutual aid so one emergency doesn't destroy a family. And one of the biggest things they do is what I now call the Amish hedge. They prioritize cash-flowing safety and low-risk income over speculative assets like gold. So what does that mean for us in 2026, people who don't live like the Amish but still want to protect ourselves? It means shifting from buy something that might go up in price to build something that protects you today and grows quietly over time. The Amish hedge isn't gold. It's a combination of things that are accessible to almost anyone with a normal salary. One, a real emergency fund in high-yield savings, 4 to 5% APY right now. Not under the mattress, not in gold coins, but in an FDIC-insured account that earns interest while staying liquid. Two, paying off high-interest debt aggressively, because 20 to 30% guaranteed return by killing credit card interest beats almost any gold investment after fees and risk. Three, small, consistent investments in low-cost index funds or ETFs, not trying to time the market, just letting compound growth do the work over decades. Four, building skills or assets that reduce your expenses forever, learning to cook in bulk, fixing things yourself, growing some food, buying tools that save labor costs. That's it. That's the hedge. It's not exciting, it's not something influencers make viral videos about, but it's what actually works when life gets hard. Let me give you a real comparison. Let's say you have $5,000 extra right now in 2026. Option 1, buy gold. You buy physical gold coins or bars, you pay dealer premium, 5 to 10% over spot price, you store it, say for bank box, more cost, you hope the price goes up. If you need the money fast, you sell back to a dealer and lose another 5 to 10% on the spread. No interest earned, no cash flow, just hope. Option 2, the Amish-style hedge. Put $3,000 into a high-yield savings account at 4.5% APY, earns $135 per year free, fully liquid, FDIC insured. Put $2,000 toward paying off a 22% credit card, saves about $440 per year in interest, guaranteed return. Next year, redirect that $440 saved interest plus the $135 earned interest into more savings or index funds. Within a year or two, you're ahead in real dollars, not speculative hope, and you have cash you can actually use when life hits. Gold might go up 10 to 20% in a good year, or it might sit flat or drop. The Amish hedge gives you guaranteed wins plus liquidity plus peace of mind. No dealer fees, no storage risk, no waiting for a buyer. Now, I'm not saying never buy gold. If you already have an emergency fund, no high-interest debt, and extra money you can afford to lock away for 5 to 10 years, sure, allocate a small percentage, 5 to 10%, to gold or gold ETFs as a diversification play. That's fine. That's smart. But for the average person in 2026, the person who's still trying to build that first 5K to 10K buffer, the person who's paying 18 to 25% interest on credit cards, the person who's worried about the next car repair or medical bill, telling them buy gold first is bad advice. It's putting the cart before the horse. It's selling hope instead of stability. The Amish don't chase hope. They build stability. They protect what they have. They invest in things that produce or save money. They keep cash close and debt far away. That's the hedge that survives crises, not shiny metal in a safe. So what does this look like in real life for someone with a normal salary today? Let's say you bring home $4,000 to $5,000 a month after taxes. Step 1. Stop the bleeding. Track for 30 days. Find the leaks, subscriptions, delivery, impulse buys, BNPL creep. Most people find $200 to $500 a month they can redirect without feeling deprived. Step 2. Build the foundation. Set up auto transfer $100 to $300 per paycheck to a high-yield savings account. Ally, Capital One, SoFi, still 4 to 5% APY right now. Do it the day you get paid so you never see it in checking. Step 3. Kill expensive debt. Any credit card or loan over 10 to 12% interest, pay extra on the smallest balance first, snowball method for momentum, or the highest rate first, avalanche for math. Every $1,000 paid off at 22% saves you $220 per year forever. Step 4. Once you have $3,000 to $5,000 safe and high-interest debt under control, start small investing. $50 to $100 a month into a low-cost S&P 500 ETF or total stock market fund. Let time and compounding do the heavy lifting. That's the Amish hedge in modern terms. It's boring, it's slow, it's not sexy, but it works when everything else feels like it's falling apart. I've watched friends chase gold, crypto, meme stocks, hot tips. Some made money, some lost big. But the people I've seen actually get ahead, the ones who sleep okay at night, the ones who handle emergencies without panic, the ones who aren't always stressed, they're the ones who did the boring stuff first. They built the buffer, they killed the expensive debt, they protected their paycheck, they invested consistently in simple things. Not because it's exciting, because it's real. In 2026, when fear is high and hype is louder than ever, the quietest move is often the strongest one. So if you're watching this and thinking, maybe gold isn't the first thing I should buy, you're already ahead of most people. Start with what's in front of you. Look at your last bank statement. Find one leak, one subscription, one habit, one automatic pull. Ask, do I actually want this, or is it just happening to me? Cancel it. Redirect that $15, $40, $50 to a high-yield savings account instead. Watch what happens over the next 30 days. You won't become a millionaire overnight, but you'll start feeling something most people don't: control. And once you have control, the whole game changes. If this video made you think twice about the hype, drop a like. Comment below, I'm skipping gold and doing X instead, or what's one leak you're plugging this week? I read every comment. Subscribe if you want more real talk videos that cut through the noise. Thanks for watching all the way through. You don't need to chase the next shiny thing. You just need to stop losing what you already have. Let's keep going. I'll see you in the next one.